Hi, welcome to this McBoss Capital channel. My name is Michael Chu. You can reach us at support@mcbosscapital.com. Today we're going to look at whether the stock market has currently bottomed. Quick disclaimer, all materials shown here are for informational purpose only. They are not investment recommendations and I'm not a registered investment professional. As the market currently going under correction, we're going to look for a bottom and what to buy and when to buy. So we're looking at the general market direction as well as the sectors and industry groups that are showing potential strength, and as well the stocks related to that. So as far as the stock market analysis goes today, we're going to talk about what happened since the last video we posted 2 weeks ago, and we're going to talk about whether there's signs of strength at this current market potential bottom. It did close at the high of the week, so that's a good sign. What to look for in coming weeks, what are the current market conditions. We'll look at sectors performance. We'll look at previous earnings in the last week by Microsoft, Apple, Tesla, as well. We're going to see earnings coming up from Google, Facebook, Amazon in this coming week. Some strength we see in growth stocks include Team, CNXC, and Now. And some cyclical stocks like MATX and CF. So since 2 weeks ago, we have talked about the support line right here, which is coincide with the 200 days moving average, which is the black line right here. And we were saying that if it fell this line, and it did the following week, we probably see a huge, bigger drop, and that's exactly what happened. We saw a much bigger drop right here. 5 days in a row, and where Monday there's a potential bottom right here. A lot of analysts call that day potential capitulation, where people are just panic selling whatever they really fear. And then what we saw was Tuesday to Friday, and even on the day Wednesday the Fed speak, you see it tries to move up, but it actually closed after the Fed speak, and that's because they're expecting now the market has priced in more rate hikes, potentially 5 this year, because the Fed is just so hawkish and they really care more about containing the inflation. But right now, what we had seen since Wednesday, on Friday we did kind of try to test the lows here right here. It didn't really come close to it, and then it did rebound by end of day Friday. So if you look at it from a weekly perspective, Nasdaq actually had a small gain, really small gain, but still it recovered all the losses since Monday. This could be a potential bottom right here. It's hard to say right now. This is S&P. And we see a similar pattern. Here's the 2 weeks ago, the two bottoms here, and then it broke that support line, and then it went straight down, and then we see the similar action as Nasdaq, where it closed, strongly at the end of the week, which gives it a positive week actually. So once again, this is very important here, that for this rebound by end of day Friday. Here's Dow. We're seeing the same exact pattern. Here's 2 weeks ago, two bottoms here. It failed at support and it drops, and then now you can see it's rising. The lows are kind of higher right now, and then now it's close at the end of the week, really strong, and actually turns out to be a positive week for Dow. As for Russell 2000 index, the small cap index, 2 weeks ago we see this two bottoms here. Again, it failed that support and it went straight down. The only difference here is between Russell 2000 and the other indexes. On Friday, actually make a new low before rebounding, and also as it rebound, it actually didn't close up near the top of the range, so it still suffer a loss for the week. So this is perhaps the weakest index right now, something to watch out for. So let's talk about the signs of a potential bottom. So obviously if it hit new lows, and right here it hit a new low on Friday, on Monday it hit a new low, on Friday it hit another new low, this is a sign that, you know, the potential bottom is not made, as it could continue to go down. So that's Russell 2000. If we look at NASDAQ, the difference here is that it didn't make a new low, right, compared to Monday. So that's on Friday. So that's a good sign. And what we want to see is this, you know, potential low form, and it might continue to be volatile as we've seen in the market. And we hope that the lows will form along this trend line somewhat, and it might continue to bounce. And we hope that it will bounce above this green line, which is the 10 days moving average. And once that test is done, is successful, then we should see the general market continue to move up, and we will see this 200-day moving average continue to probably slide down a little bit, and we might see it eventually bounce back to this 200-day line, and there will be another big test here. So you know, there could be like at least a few more tests here. So the 10-day would be the most obvious one right now. 21-day, I'm not sure if there'll be a test there, but certainly at the 200-day moving average right here. And we might continue to see this you know, gyrations here, and eventually, you know, the 50-day will catch up to this 200-day, and we'll see whether it can bounce above right here. Once that, you know, test is successful, you know, we most likely will see it move up and then come back down and test this this averages once again, the 200-day or even the 50-day, depending how far this goes, because the 50-day could go further down and it might come all the way back down here, and this will be the true test whether the market you know, is going to survive this, continue this uptrend. So there's, like I said, there's at least 3-4 tests here that's going to happen in the next few weeks. Now of course, this might not even happen. We could you know, come down from starting next week. We could actually, you know, fall back down here. So, you know, so it could eventually come back down here, and we'll continue with the downtrend, and, you know, this would be probably the worst case scenario right now. So it's still hard to say, but the good sign is Friday, it could have easily make a new low, but it didn't. Instead, it closed really sharp at the top. So that's a really good sign. Just to show what it looks like intraday on the NASDAQ, this is just the QQQ. It's very similar. And you can see how it, you know, it bottomed like, you know, 9:45 Eastern time, and it just went straight up, and then it did another small test here, and then before, in the last hour and a half, it just went straight up with lots of strength, right? So this is a really good sign that the market able to close the week, you know, much higher, you know, in terms of compared to the low of that day, as well as, you know, the index, you know, the 3 major index actually was able to get, you know, have a gain by the end of the week. After, you know, if you look at the 5-day period, you know, Monday was the severe drop right here, you know, during the first few hours, and it was very significant, with Dow dropping over 1,100 points, and it was, you know, close to 4.5% for NASDAQ in terms of the drop. So now we have closed at the top of this range, near the top of this range, and this is a really good sign, and we hope Monday we want to see more buyers coming in, and maybe even perhaps more short covering, that, you know, people have to cover their shorts, and that could propel this rebound, continue to rebound. And as I mentioned, we might see a test here. You know, if we see this coming week rebound, we will eventually hit this 200-day, and we might see a test right there. So next, we're going to go to our website, www.mcbosscapital.com. We're going to look at the daily, the weekly update here. So the stock market closed off the week off on a positive note. Mainly it closed at the top of the range, and obviously we see a lot of volatility, and we had Nasdaq, S&P, and Dow Jones all in positive territory. So that's really a good sign after a really bad beginning at the beginning of the week. Stock market entered bear market territory of more than 20% on Nasdaq and Russell. So I don't see the headline talk about this, but Nasdaq has already corrected from peak to trough like 23%, which is really bear market territory. S&P right now is 14%, Dow Jones 11%, and Russell at the worst case 29% right now. So earnings season has started, and we're going to look at some charts here. So the big caps like Microsoft, Apple, Tesla is reported. Microsoft, Apple have good sentiment from investors, but Tesla was actually dropped. The Federal Reserve sound more hawkish on Wednesday than what most investors expected. It did turn down right after the Fed speak, and also the market seems to have now priced in, instead of 4 rate hikes this year, now it's 5 rate hikes this year. All the major market indexes, as we saw earlier, made a low on Monday, closed near the high of the week. This could be a potential bottom for market correction. No one really knows. Only time will tell. So that's what's happening with the indexes. In terms of accumulation and distribution for the stock market breadth, we are seeing 67 industry groups under accumulation and 118 with distribution, and 127 stocks under accumulation versus 337. So this is slightly getting better. It's still very weak. We really want to see accumulation come into more stocks. It is a ratio of 1 to 4. The week before it was like more like 1 to 10 or 11. So it's really bad, but it has improved slightly. But we still want to see, accumulation come in, especially if we think this is the bottom. There should be more investors jumping in back into the market. In terms of the industry group strength, we are seeing some strength, not a lot. You can see most of the groups are only showing 1 or 2 stocks under accumulation. We really like to see, where the energy sector right now, oil and gas groups are really still dominating the marketplace. You can see there's multiple stocks under accumulation in each group here. So here's a comparison for all the spider sectors. So we can see that XLE is the most best performance this year, year to date, as at 18%, really strong. Whereas the closest is financial, which is actually at a negative. So every other sector is at a negative. Financial came in second, consumer staples is third, and utilities is fourth. So very defensive sectors here, dominating the top, except for energy, which is probably is better hedge against inflation right now. Let's look at some of the mega caps right now. Microsoft report earnings, and we are seeing the rebound right here. You can see the lows, and it is now above 10-day moving average, the green line. So this is really good sign. We hope to see this continue to rebound. Again, we're gonna follow the same tests as the major indexes. We want to see that it passed the 10-day moving average, and we want to see test this 50-day moving average. So those are the two major averages right now that is going to be testing in the coming weeks. Next, we look at Tesla. Tesla fell support right here, and it had bad earnings, and this is the big drop right here on Thursday. And on Friday, it did rebound on the 200-day moving average. So it'll be important for it to maintain this level, even if it doesn't move higher. But hopefully it can hold on to this level right here. Otherwise, we may see further drop. But if it can hold on, then again, we want to see the 10-day moving average, that it climb above it, and then the 50-day right here, that it climb above it. So those are the few tests. And finally, we're going to look at Apple here. Apple also have good earnings report and was able to, you can see, it did rebound from the lows here, and now it's above 10 days, and now it's actually at the 50-day moving averages. So really good sign, and you know, it could really take off from here. So something to watch out for. Next week we're going to see Google report. It is currently just sitting near the 10-day moving averages. You know, it has risen from the lows, but you know, it's still not by much. So it'll be you know, testing, you know, this 200-day here, and on Tuesday when we report, it most likely will make a decision whether it'll, you know, go above this or go below here. Amazon also will be reporting on Thursday. You can see it is quite far down below the 10-day moving average, so it's definitely not looking, you know, technically that strong at all. And you know, we'll see whether the report will you know give it a boost back above this, or whether it will continue its downtrend. And Meta platform, Facebook, very similar. It's also, you know, quite far below the 10-day. So you know, we want to see if it can move up here, if they have some sort of good earnings and can maybe improve investor sentiment. So a few stocks that doing well in terms of as a growth stock is Team. Last year they report good earnings, as you can see here, and the stock did bounce here. Now it sits comfortably above the 10-day. It is, you know, hitting the 200-day right here, and we can see the 50-day is also converging down here. So we would like to see that this stock can over the next week or two, like, you know, really take off from here. Then that will be the end of the correction. If we look at ServiceNow, it also had a good earnings report right here, and investor likes it, and again it has a strong rebound, and Thursday and Friday seems to have shown some strength here, with lots of volume coming in. So definitely investors are looking at this closely, and we're going to be testing, you know, both the 200-day and 50-day right here, and hopefully it can surpass that. CNXC, this stock has made a bottom a while ago, like a few weeks ago, and you can see it's doing really well. In fact, it make a breakout right here on a W-shaped pattern, or also known as double bottom pattern, and you can see it hit a new high right here. So this is something to pay attention to. RS ratings at new high. Lots of strength in terms of technical. It did report earnings a couple of weeks ago, so that could be the reason. So again, now that we are in earnings season, a lot of stocks can be, you know, recovered if, you know, their earnings are good, and investors like the prospect of for this coming year. So there's an industry group is known as transportation ship, and they have been doing really well recently. Even during the market correction, it's able to, you know, build this uptrend here. This is a weekly chart, so you can see, like, you know, this recent week it has a big test. It tests near the 200-day as well as the 50-day. If you look at the daily chart, you can see it tests this 50-day clearly. It came close to 200-day, but now we are on a really strong uptrend. So there's lots of stocks in this group: Zim Integrated, MATX, Kirby, Starbulk, Danos Corp. All these stocks are doing really well. When we look at MATX right now, you can see this pattern here. It broke out from this cup handle pattern right here, and now it's moving upwards. So something to watch out for. This stock is doing really well, so it may have more room to run. The next stock we're looking at is CF Industries. This is from a different group, chemicals, agriculture. It has, you know, strong run right here, and then it pulls back as the market did, and now this recent week it actually is showing strength again. It's sitting comfortably above the moving averages, so there is potential for more room to run here. So thank you for watching this video. If you like it, give us a thumbs up on this video. You can reach us at this email. You can go visit our website at www.McBossCapital.com, We do have some course at the Teachable site. We can be reached for a one-on-one session, or regarding help on how we analyze the stocks and so on. Thank you for watching this video. Subscribe to our YouTube channel if you haven't. Thank you. Have a good week.